Hey everyone, this is Jason Ayala, and today I'm going to talk to you very briefly on how a capital gains tax works. I've had about 3 different clients over the past 2 weeks say to me, but then if we sell the building, we're going to have to pay 50% in capital gains. And that's a common misconception that the public has. People generally think that if you sell a property, you're going to have to pay 50% of the sale proceeds to the government in taxes, and that's what the capital gains tax is. Actually, that's not how it works. Okay, the way a capital gains tax works is that it's actually a capital gains exemption, meaning that instead of being taxed 50% on your proceeds, you are only taxed on 50% of your proceeds. And that tax rate is whatever the prevailing tax bracket that you fall under is. Okay, so to give you an example, this is an actual example from a client of mine. She bought a property about 15 years ago for $250,000. It is now worth approximately $1 million. So if she were to sell, she thought that her proceeds would be $750,000, and she thought she was going to have to pay 50% of that, or $375,000 to the government as a capital gains tax. In actuality, the way it works is 50% of her proceeds are exempt from taxation, and she's going to be taxed on 50% of her proceeds. So instead of being taxed on $750,000, she's going to be taxed on $375,000, and assuming that the prevailing tax bracket that she falls under is 46%, she's going to have to pay $172,500 in taxes. It's still not a ton of fun, but it's $202,500 less than what she thought she was going to pay from that $375,000. Alright? Are you a bit confused? Watch the video again and you'll completely understand. It's pretty simple. Okay, but again, if you have any questions, feel free to call me, email me, or simply leave a comment below, and I'd be happy to help you with anything relating to capital gains or real estate. Thanks a lot.